Thank you for the introduction. Hello, people. So, welcome to this panel on institution and crypto industry. I've been speaking on institutions and crypto for now about 2-3 years, and the room size seems to be growing every year. There seems to be a lot of interest, especially this year. We're seeing a lot of regulatory framework coming out of Korea, the US, from Europe. And there's other markets, especially on the emerging markets, that's following suit. So we're seeing a very fast and very speedy institutionalization of crypto industry. So here we have three experts. We have Dina from the US, and we have Ryan from Korea and US, and Alex from US. So if you could go around, maybe start with you, Alex, and quickly introduce yourself and what you do and what your company is focused in.
Absolutely. Hi, everyone. My name is Alex Krüger, and basically I've been in crypto for a decade, and pretty much trading my own book, so independent portfolio manager. And I'm a founder of a couple of protocols as well. I advise a few crypto projects, mostly in DeFi, and as well, I run an advisory firm for basically macro for crypto and crypto for macro audience. And before crypto, I'm an economist, and I worked in basically sell side trading forex and trading physical commodities for a little bit over a decade. Thank you very much.
Great. How about you, Ryan?
Oh yeah. Hi everyone. I'm Ryan from VegaX, and our company is providing almost anything, including tech and strategy, to the smaller institutional players in this market. And as a chief of staff, I'm in charge of all the products and strategy that we are offering to our clients. And at the same time, I'm overseeing our development efforts for our quant engine, which is the infrastructure that for our strategy that we are providing. And I'm in a pretty unique position because, like Sam introduced me, because our team base is mostly in Korea, but our clients is hugely centralized in the United States. So I have a good experience to watch these two markets evolve at the same time. So I'm very happy to share what I've experienced today here. Thank you.
My name is Dina. I'm the co-founder and chief investment officer of Syncretic Capital. So mostly I'm responsible for day-to-day oversight of the portfolio, as well as doing everything that's involved in running a hedge fund, including talking to counterparties, onboarding things, building out systems. I'm a quant by training, so prior to doing this, I was at Bridgewater for 4 years, working with one of the chief investment officers, Bob Prince. So I was his technical prototyper. I was also the co-author on several of Bridgewater's pieces on the crypto space, including the Ray piece on Bitcoin that he put out several years ago. And before that, I spent several years working at Goldman as well. So I've experience across portfolio allocation, trading, technology, and strategy development.
Great. Thank you, Dina. And a quick introduction of me. My name is Sam Kim. I'm the founder of GoChapaa. We are our first licensed crypto wallet in Africa, and we're working with the regulators to build regulation and to give out licenses, which has been an uphill battle, but we're following through. So today I think this is a very excellent opportunity to ask really good questions regarding not just regulations, but where the market is headed, because that seems to be the big variable where the market is headed. And we have three experts with very, very, very detailed backgrounds and experience. So if I could start with you, Alex. You have a very broad view. You're a macro trader. Do you have a sense, we just want to pick your brain on this. What's your sense of the risk appetite currently at the market?
Yeah, the risk appetite on, it's interesting because on one hand, on traditional assets, we are in a bull market, and interestingly, a very large percentage of the investing crowd is not aware of it or do not want to participate for very significant fears around the world's macroeconomy. That's on the traditional finance side. On the crypto side, unfortunately, is very different. We're in a market which is basically driven almost exclusively by futures flows. So there's basically very little spot flows. And what that means is that it becomes what we call a P2P market, player versus player, because there's no real follow-up. So the way to think about this is what traders are doing right now nowadays is basically focusing on literally liquidating retail, basically. Wait for news to come in, get everybody excited on leverage, and then push it lower and liquidate them. The expectation is that would change. And there's one way for it to change is the Bitcoin spot ETF. And which I think we're going to talk a lot about that, but it's unfortunately is the one key variable nowadays that really defines where crypto is going, which also means we're going to have to wait a little bit because quite likely there will be no decision on this matter until January of 2024.
Excellent. I mean, yes, definitely we do want to save 5 to 7 minutes on talks on ETF, where it's going, where it's headed, and on each major jurisdiction, being North America and Asia. But before we really deep dive into what's going on with the ETF, if we could also go around and get an opinion from Dina on Europe, because she's just coming back from Europe as well. What are the European institutions looking at? What is their risk appetite?
I don't have a strong sense of the European institutions specifically. I have a better perspective on American institutions. I would say the major things that they're waiting for is, as Alex said, the ETF approval. The other thing they're kind of worried about right now, especially with respect to allocating to crypto and liquids in general, is how managers are going to be able to handle the recession. So many of the asset managers over the past decade have only really kind of experienced a growth-only environment, and crypto being as volatile and new of an asset class as it is, just doesn't have that many experienced traders that are able to navigate this kind of dynamic. So there's the ETF approval that's required for beta holding, because even holding through Coinbase right now is a little bit controversial given the regulatory action against Coinbase. So a lot of these institutions have actually had to sell their holdings because they don't want to be seen as interacting with a company that may or may not be, compliant with the current regulatory state. And the other one is, potentially accessing crypto through funds. And we've seen a lot of exposure to the VC space, but a lot of institutions are kind of over-allocated to illiquids. And so it's really, seeing whether hedge fund managers can survive this difficult market that lays ahead, and also waiting for beta exposure through ETFs, which are going to be the primary compliant way for these allocators to hold capital.
Great. And for Ryan, a question for you is, I'm guessing your clients are most based in the US because there are some barriers in Korea for Korean institutions to enter. What's your opinion on that?
Yeah, like you mentioned, in Korea, it's not actually, there's actually no legal basis to invest directly into this asset class, because the government wants to treat those assets both with the existing one, the legal one, and the new guidelines that they will announce soon. But in the existing one, asset managers cannot treat this asset class because that's not included in the legal documents. And for the newly announced guidelines that's been announced recently, they don't have, it's actually about the license, and they don't have a type of business asset manager, so which means they don't provide any legal basis for anyone to operate businesses in this industry directly. So that's why in Korea, even though there's a very high interest from the institutions, there's no single players that's being outstanding to and saying out loud they are preparing it. But I know for a fact that they're preparing it at the internally, but there's no one actually saying that. So they're doing some testing in the other countries that's more generous to this asset class, but in Korea there's nothing there. But I also believe that the decisions in the United States will be crucial because Korean regulators tend to follow the direction what's been decided in the United States.
So I think you touched a very critical point where we are moving on. So what are the critical factors that we're waiting for from the U.S. besides from ETF? Obviously, ETF would say it's the 80 to 90% of what the Korean regulators are looking into as well. But are there any other factors that we should also keep an eye on besides from ETF that other markets, such as emerging markets or in Europe or other parts of Asia that's less developed in terms of crypto, should benchmark and also study? I'm addressing this question to anybody.
The thing there is what's driving crypto right now used to be, let's put it this way, correlation between Bitcoin and macro assets or equities used to hover around zero for a full decade. And then 2020 came and we had basically Paul Tudor Jones and a very large number of macro people coming into the market, and correlation went above 50% consistently very consistently across time frames. You pick weekly, daily, intraday, minute. It's like everywhere it was largely driven by equities and risk, and that's gone now. The way to put it is Bitcoin is not a macro asset any longer. The play is that the ETF not only changes flows, it also changes, basically, this is my view, is that once we have an ETF, market makers are going to start coming back into the market. That basically, the way to think about it, what does a market maker do? They make markets. And to make markets, they run pricing algorithms that basically are largely, not fully, but largely driven or impacted by correlation algorithms. So when these market makers left the market, which happened early this year between basically April and May, and they kept on living, the view is that this is temporary. So basically that it's a temporary change in the market, and it's going to shift back up, assuming there is an approval. And briefly, aside of that, like I'm very, very bullish on traditional assets. I think the artificial intelligence, generative AI changes that the world economy is seeing, they're just starting, and it's like fading the internet before the bubble. However, that's not impacting crypto yet. So the view is this will change sometime early of next year. And I keep on talking about Bitcoin when crypto is so much larger, but the thing is, the correlation, again, correlation, right? But correlation of crypto assets and Bitcoin is, it's higher than 75%, and this is extremely consistent. So it's very hard for a healthy market for us to have a healthy market and prices going up when Bitcoin is actually flatlining.
Yeah, I think there's a couple other things that we're kind of waiting on, and it's better solutions for custody. So there's a lot of fear around counterparty risk, exchanges, et cetera, after what happened with FTX. And so there's several new solutions that are starting to come online, like for instance, Mirror and other things like that basically allow people to preserve custody of their assets while being able to trade on centralized exchanges. So I think the sophistication of some of these new tools coming out is going to be helpful to bring investors in, as well as just other technologies. So for example, one of the problems that's kind of challenging to solve in the crypto space is pro rata allocation among investors. So how traditional funds often work is they have several different managed accounts that they will trade simultaneously for. But in crypto, the technology for doing that hasn't really been solved yet. I think this is another thing that'll kind of, allow more sophisticated investors to come into the space and bring large capital, is some of these, compliance nuances that just need to be addressed.
Definitely. I think we're touching on very sensitive issues regarding ETF, also regarding the institutional investors who are in charge of mostly diversifying their portfolio. And you touched on a very critical point, which is correlation, which nobody pays attention to, but we should all be, because correlation has been jumping up and down. The general view was that crypto was viewed as a risky asset. However, is your view, to you, Ryan, after the institutions come in or enter into the market, are they coming in viewing crypto as risk asset and accepting that correlation, or is it becoming more of a store of value, something more for them to diversify their portfolio?
From my experience, we can actually categorize the institutions into two, and that's like you very handsomely put. They are those who are interested in a short-term fiat return. They don't actually care about the asset class itself. They just see it as an opportunity because this market gives volatility, enough liquidity. So they see this as another market they can deploy their strategies like arbitrage, volatility play, and any other market neutral strategies. So that's one type. And the other guys, they want they're so-called crypto maximalists. They think that collecting as many major cryptocurrencies as possible is the best way to secure their financial goal. So there are actually two types, like I said, and it seems like those who are active in this market right now, those who remained, they have more long-term view, relatively speaking, because when you think about that, what FTX told us, at least short-termly, it's a risk that could make your fund go zero because you picked the wrong counterparty, right? And when you put that into your calculation, that's a huge risk because that's something that it's almost impossible to hedge. So those who want just seeking alpha in this asset class, they left, most of them, and those who remain, they have some longer view, and I believe they are those who want to get more exposure in this market, allocating more capital in this market, they have similar view, I think.
Great, that's some very interesting points. I think before we move into a deep dive into what is going on with the ETF currently in the U.S. mostly, and also in Korea, just to give you a very quick news update in Korea, the current regime has been pro-crypto, have been rolling out a lot of different kinds of changes and updates to the current capital markets law. And like Ryan says, Korea is benchmarking a lot of what SEC is saying and doing and will do. So obviously, this will turn the tide on how we think and how we view crypto as part of a traditional, let's say, a national pension fund, which oversees trillions of dollars for them to have exposure into crypto. So before we deep dive into ETF, I would love to get your market views and just ask a very fun question. And we can go around and just give your view on this. Do you think the current, you've already kind of given your view, but do you think the current prices of crypto, Bitcoin mostly, is already pricing in an approval for ETF or not?
It's 100% not priced in. Too much fear. If we actually look at the chart, we are sitting exactly where the BlackRock news came in.
Yeah.
So no, I think anything in the 20s is basically noise and represents a very good entry point. And I think that eventually Bitcoin as a risk asset is going to catch up with not all of equity, but some of it. And something I wanted to touch upon very briefly there is just like on the equity world, you have what is called unprofitable tech that has been doing terribly in a world of high interest rates. Crypto can be also considered as unprofitable tech, or most of crypto generates no revenues, but there is a percentage of crypto, a small and growing sector that generates a lot of revenue and is attracting a lot of interest. So I know we've been kind of pessimistic here, but beyond approval, look under the hood, and there are some very good things going on.
Great. How about you, Ryan?
I mean, it's a hard question, right? But about the pricing of the Bitcoin. But for me, I think we are beyond the distribution phase because it's been we've been sideways for a while, and there's a lot of traces that we can think as a movement of the another collection phases. So even though it's before the approval, it seems like there's a movement from the bigger institutions or those who with bigger capital to collect more of these major currencies, I would say. So I believe for that question, I'm not saying that there will be no correction anymore, but we are. I mean that this is what I'm saying to my friends. I'm saying that it's okay for you to start buying it again. So that means we cannot predict the price itself, but at least I think I'm a little more comfortable in the range of the price we are right now.
Yeah, I don't think it's priced in yet. I think for it to get fully priced in, you need new capital to flow into the space, and that capital flow will happen mechanically once the ETFs are created. And so, as was said, basically crypto isn't trading in this PvP environment, and we need to stop real spot inflows in order to actually create that upward pressure and push the prices up, because right now trading on derivatives is just kind of shuffling the same capital around within the industry.
Great. So I would like to go around and ask you the same question as well. What are the current barriers in the U.S. That we should be looking forward to or looking after that is stopping or that is delaying the current process by the SEC to approve the application for the ETFs?
Oh, I think there's nothing specific delaying it. One should be assuming that they will do what they've done so far very consistently, which is wait until the very last minute and just then they change, or hopefully. Yeah, so that's 245 days from the moment it was filed. That puts it in January.
Great. How about you, Ryan?
I'm actually totally agree with Alex here because, logically there's no, no way to defend themselves, the ACC. That's what I'm thinking. So, I totally agree with Alex here.
Yeah, I think the biggest hurdle we have has been resolved, and so now hopefully it's clear sailing from here. But again, it's a matter of timing and time. And if the recession hits before the ETF approval hits, then Bitcoin could have more downside. So I think this is probably one of the things that is, causing fears with new allocators entering the space right now is, how is the recession going to play out? Or is the ETF going to come first? What happens if the ETF comes? Then the recession happens. All this creates a lot of potential offsetting pressure on Bitcoin.
Sure. And I think there has been a lot of emphasis on the U.S. SEC on the ETFs. But as you know, even in Asia, ETF is the driving force of every equity market. And all the institutions, there are about 65 broker-dealers in Korea, licensed broker-dealers, that is all preparing to take part in however they can. Do you think the current situation in the U.S., because you have NASDAQ, which is such an advanced marketplace that is actually ready to trade the ETF, if you go into other markets, Europe and Asia, should we be looking and studying the launch of the ETF and how it trades on NASDAQ? What is the kind of time frame that you would recommend for regulators outside of the U.S. to study post the ETF approval?
On that, I do want to say let's put it this way, the ownership of, let's take gold as an analogy, ownership of gold, ETFs, basically 50% is in the US, 50% as in the rest of the world. When you look at Bitcoin, it's 25 billion out of 30 billion in assets under management by several ETF-like vehicles. 25 billion out of 30 are in the US. So it's a US thing, like it or not. That's the way it is. And the rest of the world already has spot ETFs approved in quite a few places. So I think there's no real lesson to be taken. We're just waiting for the green light and to move on. Yeah.
I want to say something, some different aspect about this. So, this might be limited to Korea's situation, but I believe the major things that's stopping our regulators from anything related to cryptocurrency is the image that this word has in our society. Because to be honest, the word cryptocurrency is not consumed as a positive image in our society, because usually it's tied up with the words like gambling, high risk, and greediness, those kind of stuff. So and even with the most passionate investors in the world, it's unfortunate our Korean investors were experienced losses than profit, and a lot of the losses they experienced was because of the scam or scam-like businesses, and there are a lot of ongoing investigations for them. So I have to admit that the regulators can feel uncomfortable to give the positive sign to this asset class. So I believe the process, the way how we can handle those cases, and the right regulation that we can put into this asset class could be the another key for the adoption of the institutional adoption in this industry.
Thank you. And how about you, Dina?
Oh, I don't have any additional, regarding the global aspect.
Can I add something?
Sure thing.
There is 130 countries right now developing central bank digital currency. Out of those 130, we look at the G20, and G20 is 19 out of 20. And of those 19, 9 are in basically already running pilot programs. So we barely talk about this in the industry, but this is happening. Many of these services are going to be based in blockchains, or public blockchains, or being compatible with such blockchains. Therefore, I think at some point we're going to see a lot of innovation back in this space coming from the CBDC side. And the thing is, this innovation, I think, is going to be such that we can't even yet imagine what's going to happen. It's like the same thing with ChatGPT and AI. It's going to be so big at some point that things are going to change dramatically in a way that we can't yet even imagine.
I agree with you, Alex, 100%. And we were running out of time, so we couldn't touch on other aspects. Obviously, stable coins, central bank digital currency, so much to talk about. But we did want to touch and deep dive into ETFs, definitely. Just to summarize, after speaking with 3 experts, we can all agree that ETF is already here. The regulators and both sides have to have a very open and transparent discussions going forward. It's not a matter of when, but it's not a matter of if, but when. I think U.S. has been leading the market, definitely. Asia has been getting ready, and chances are, if, like you said, if ETF gets approved in January, a lot of the institutions in Asia will likely trade through ADRs. They will likely trade through other forms of product that they have access to, and then we'll see a huge capital flight out of Asia, and then the regulators will start moving, and we'll probably start having ETFs approved in Korea as soon as next year. So thank you, Alex, Ryan, Dina. Excellent discussion, and thank you all for joining this discussion on institution and crypto industry. Thank you.
Thank you, everyone.
Thank you.